Good morning, welcome. I'm joined today by Alberto Ponti, who is the Chief Strategy Officer at F2i. Welcome, Alberto. Thank you very much for joining us this morning. I wonder if you might please just give us a quick overview of F2i, if that's okay.
Yeah, of course. Thanks, first of all, for the interview. And F2i has quite a long history. We were set up in 2007. And since then, we have grown our asset base substantially. And today, we have around a bit more than 8 billion euro of assets under management. We have two strategies. One is the equity strategy, which is the legacy from since we started. And then in 2020, we also launched a debt and credit infra strategy. I think one of the key characteristics about F2i is that we are a pure play in infrastructures. So we do nothing else but infrastructures. And at the same time, within infrastructure, we are generalists. So we cover different sectors, which span from renewable energy to telecommunication, digitization more in general, social infrastructures, and so on and so forth. So we have within infrastructures quite a wide span of where we sort of deploy our capital, be it on the equity and on the debt side.
Great, thank you very much for that. Now, I understand that F2i has just launched 2 new funds. I wonder if you might please give us an overview of that, and then perhaps after that we can touch on the types of investments that you're expecting to make from those funds.
Yes, of course. And obviously we are in a period where F2i probably has moved a bit against the current, so to speak. The constant feedback I get from LPs, so the investors, is that GPs are struggling a bit with the exit for very legit reasons behind it. Reality is that F2i has moved in the other direction. Bear in mind that we have around 8 billion euros of AUM. Just in the last 12 months, we have paid back to our investors 2.6 billion euros and achieving very attractive returns. And the reason for it is that we have a scheme in place that guarantees a full alignment, perhaps even more than full alignment, to our LPs, which is directed towards maximizing the returns of our funds, even when this comes at expenses of, obviously, the management fees. But we are all and thrive in order to maximize the returns of our investments. As a consequence of that, we're obviously also on the market, like anyone else, raising funds. And we are raising funds for our 2 strategies, the equity and the infra credit strategy. On the equity side, we are on the market with our flagship fund. It's going to be 1.5 billion euros. And we are in a pre-marketing phase at the moment, and we will be in fully fledged fundraising towards the end of this year. This is a fund that it's split basically in 2 sleeves. One that has a sleeve dedicated to the Italian investors for Italian investment. And then there's another sleeve that will invest in Europe. Both sleeves are open to both Italian and non-Italian investors, so they can decide where to allocate the capital. And this equity fund will have a core plus strategy with a pinch of value add. Although I know there's a big discussion if you move around here, you will hear different definitions about value add. And we have our own. And what we mean by value add is we're not going to do any exotic business, but what we do is we stick to our core areas of competence. Simply, we move up the value chain, and if anything, we take a bit more construction, or you can also say a bit more greenfield risk, but in areas that we know full well. And this is how we think we can boost the returns of our funds. On the credit side, instead, we're raising the second vintage after a very successful deployment and performance of the first vintage. This is a fund that we are targeting 750 million euros for it. Again, there will be 2 sleeves, one dedicated more to Italy and the other one for Europe. And the European sleeve is targeting a cyber G defensive rating. And so we are offering to the market very attractive return, albeit within a kind of safer environment than say, to the high yield strategies. And in this case, we are already in the marketing phase. And so between one and the other, we hope to come to a first close in the next 6 months.
It's really exciting. I wonder if you might just delve a little bit deeper into the types of investments and maybe the types of assets, subsectors that the funds might be looking to invest in, given where we are in the market at the moment?
Yeah, I think the sectors are important. I think it's even more important the way you interpret investing in assets. I use the phrase sweating the assets, which probably is a bit colloquial. But we're not predicating investments on the basis of multiple expansions at exit. Rather, we like to sort of work the assets. This when we say sweating the assets, because what we do with the skills we have accumulated over the years, we try and achieve synergies, which is not just being more efficient on cost side, but also we promote quite a lot growth within the company, so organic growth, not just M&A. And so it is the growth in the financial KPIs that allows us to grow the value of the assets. And this obviously relates to the equity part. With this in mind, we then look at sectors like the energy transition, digitization, transport and logistics, which is it's a bit overlooked sector. It's been a bit overlooked sector in the past few years. We actually think it's a great sector to be in. As sometimes we say, it's not for everyone. You need to have a certain skill set to be in there. Hopefully we got them. But even when we look at more traditional sectors like energy transition or digitization, we do it our own way. And again, working from an industrial perspective, the assets. This also translates on the credit side, and how do our industrial skills serve the purpose in credit investments? Quite simply because our knowledge and skills in the sectors where we are allow us to A, structure deals that, again, probably are not for everyone, and B, allow us to price the risk of those transactions possibly better than our competitors. So even though you see that the sectors are the same, but we deploy not only capital, but an approach to investment that tries, and for now it's been successfully being different than from our competitors.
Well, thank you very much for that. Really appreciate your time, and wish you all the best with the fundraising, both of those strategies.
Thank you very much.